Ladies and gentlemen, Bitcoin is about to be going on 6 months of sideways price action and consolidation within the same macro pattern, right? Why is there this plague of uncertainty right now? Why is it when I make a community poll on a generally macro bullish channel, we're getting 50-50 results, literally exactly 50-50 with 1,900 votes. And given the fact it's a macro bullish channel, I would actually say that most people right now, maybe the slight majority of people in it right now, are actually leaning a little bit bearish. They're fearful. They don't like the market right now. They look what happened to their altcoin portfolios over the last few months. They look how destroyed they are, and they're getting a little bit bearish. And you know, at worst, they're bearish, and at best, they're just not looking at the charts too much right now. And again, this is reflected via the fact that the macro price action has not made a clear directional decision for about 6 months, close to 6 months. It's just simply true. There is a plague of uncertainty. I've used that term over and over again over the last 2.5 months specifically. Why does that plague uncertainty exist? Well, I'm going to explain it to you today. I'm going to recap what's going on with Bitcoin, just quickly recap what we need to see with Bitcoin on the weekly chart RSI and the weekly chart price chart. But for the most part, the goal of this video is to give you an understanding of what's actually going on here, right? Bitcoin's uncertainty, the uncertainty of the cryptocurrency market, is not due to cryptocurrency. It is a symptom of the larger macro uncertainty with the entire global economy, but specifically the US economy, right? We're looking at things like unemployment. We're looking at things like interest rates in relation to the S&P and in relation to unemployment. And we're going to give you an understanding of what's going on there and when that uncertainty will be penetrated through with a clear directional decision. Could be very, very soon within the next couple of weeks, actually, as we see the FOMC decision coming up within the next couple of weeks, and a couple of unemployment claims and unemployment rate data releases coming within the next 48 hours. So this situation that has remained stagnant for close to 6 months, I assure you will be moving very shortly, likely within September. I've said that ever since early August. I always thought September would be the monthly move, and I still stand by that. So ladies and gentlemen, we'll look into all of that today. But the important part is going to be the discussion about traditional markets and the macro economy. I encourage you not to shy away from this video due to the fact that I'm not discussing crypto fully, because these things, as I said, are the direct causes of Bitcoin remaining in this uncertain position. So we'll understand all that today. Bingx and Bitunix, before we get into it, are the two exchanges I advertise on this YouTube channel. They are both very low in trading fees. They have both never been hacked before, okay? And with my referral links down below, you can get an additional 15% trading fee discount for life with your account if you sign up using that referral link, right? These are global non-KYC. You can sign up from anywhere in the world. Use my referral links down below for 15% trading fee discounts. Those are the exchanges you want to be on. I can assure you, I've done my research. Historically, they're very, very good. So let's see what happens with them. And of course, links are down below. Let's get into the video. Right, just recapping Bitcoin. If you don't want to see the Bitcoin recap, go to the timestamps down below and skip through. But I do need to recap Bitcoin. I'm going to be doing this every video until the situation resolves. Bitcoin is in a macro descending channel formation. Therefore, we will not have complete macro certainty until we break either to the upside or to the downside of that descending channel formation. And that could take a long period of time because unlike a triangle structure, a descending channel does not have an apex point, right? There is no point you reach in which Bitcoin has to move to the upside of a downside because it's parallel, right? The resistance and support zones always maintain the same distance between each other, so you can actually maintain within that channel for a long period of time. So when you're looking at when we should be breaking a descending channel formation, you can't look at the channel itself. You need to look at other metrics. One of the things we can do is look at these two lines right here. I'm going to make them yellow so you can see it. Right, these two ascending support lines. One is stemming backwards from 2018, cutting through very important price action. Take a look at where we've retested these lines in the past. Very important line. And you can see the other one is stemming from October last year, cutting through important price action as well. Now, if we extend those upwards, you can see they can kind of give an apex point to the descending channel. So if we look at these lines, we look at the descending channel, we would essentially need to break either those lines or the channel by essentially April next year. Now, that gives us a rough idea of when we'll break out by, but April next year is a long time away, and it seems very unreasonable to assume that Bitcoin will remain within the same channel until April. So we need to look for another metric here. What we can do is look at the weekly chart RSI, and this is what I think is the single most important thing you can watch on Bitcoin right now, right? The weekly chart RSI. Historically speaking, the weekly chart RSI has been incredibly important in foreshadowing Bitcoin moves. We look at where we've seen prior resistance on the weekly chart RSI. Just drawing in a few lines here, and I'm going to take a look at what's happened when they're broken in the past before. Let's go ahead and get this one in yellow. There we go. There's 3 separate lines. And you can see we broke this one to the upside in around May 2020. It led to the bottom of the COVID drop and it led to the bull market. We broke this one to the upside in January, December 2022. It led to the actual bear market bottom and the start of the bullish season we've been seeing since. We broke this one to the upside in October. It led to the end of a 7-month consolidation and the start of the move that led to the ETF release and the all-time high at 73K. So what I've shown you is that these weekly chart lines are incredibly useful. They go without fake out for the most part. There are some fake outs that we've seen historically. One example of this is right here. That was a fake out, but that should have been easy to tell because the overall structure was still identifiable at that point, right? There was an overall pattern that was identifiable there. You shouldn't have been looking at the smaller one per se. So that, you see fake outs when you're not looking at the right structure. Right now, we can say very confidently we are looking at the right structure. There is a clear descending resistance line stemming backwards from March, okay? The resistance and then the support is stemming backwards all the way from 2018, cutting through major price action where I'm circling right now. This forms, unlike what we have on the weekly chart, price chart, it forms a triangle formation. And with a triangle formation, we have a point of apex. We have a point in which we need to break out by, a date range in which we need to be breaking out by. We know that the weekly chart RSI is extremely accurate in predicting Bitcoin price moves. And given the fact that the point of apex is basically in 2 weeks from now, on September 23rd, what we can confidently say is that by September 23rd, and most likely within this week, probably, right? Because you look at, how tight the consolidation we get by that point, most likely within this week, within the next 7 days, let's say, we will be seeing a break to the downside or to the upside of the triangle formation of the RSI. And given the historical validity of these breaks, that would give a massive argument to where Bitcoin is going on the price chart. For example, if we break the RSI triangle to the upside, it would massively bolster the bullish position and massively bolster the argument of an upside break in the price chart. And if we do the same to the downside, it would massively bolster the bearish position and hence bolster a downside break right below the support zones and entering a bear market. So right now, what I see right now is it's not a certainty. Like if we break the RSI to the upside, it could technically roll over if we see macro, shifts in the macro economy. But for the most part, right, this is going to be very indicative of where Bitcoin will go on the price chart. So I'm looking at the next week of price action on Bitcoin as very, very major due to this weekly chart RSI. An upside break here would be absolutely sensational. A downside break would be very, very, very concerning. And we are right on the edge of a cliff. Just one more little move and we will see that downside break, which will be validated on the weekly candle close. So we are on the edge of a cliff on the weekly chart RSI and we need to be moving upwards desperately. That is the situation on Bitcoin right now, right? Now, for full confirmation, you need to be waiting for a break of the channel itself because that is the overall price chart pattern. But this weekly chart RSI has given us a lot of insight. So that's why I'm looking at Bitcoin quite closely this week specifically. And now we can get into, well, why have we seen the massive amount of uncertainty? Why have we seen a 5.5-month consolidation in what is usually such an intense time for the market, cyclically speaking? Well, let's get into it. Right, like it or not, cryptocurrency and Bitcoin are correlated heavily to the S&P. If the S&P is in a macro downwards trend, so is Bitcoin. This has been the case since 2020. A lot of things changed in 2020. The first round of quantitative easing we saw, major quantitative easing we saw in Bitcoin's lifespan, and Bitcoin ever since then has been massively correlated to traditional markets. I don't know exactly why no one really does, but it's simply the case. I mean, if you just overlay the Bitcoin chart, let's go ahead and do it right now, just so you're not taking my word for it. Let's just go ahead and bring up the BLX and compare it to the S&P 500 price chart. What you'll see very clearly when I pin these scales together is very clearly here, logarithmic chart, logarithmic of an S&P, very clearly since around the COVID drop, we have Bitcoin acting, basically word for word, right, with the S&P 500, down, up, same thing over and over again on a macro scale. And this has been about 4 years of this right now. And even back in 2017, the correlation was there still, right? We found the macro bottom, and then ever since, 2016, upwards trend on Bitcoin, same period of time, we had the top on Bitcoin and on the S&P, and we saw turbulent price action during Bitcoin's bear market. And then, so you could even make an argument argument it's from 2017, but for the most part, you're looking at a strong, tight-knit correlation from 2020 and a vague correlation starting in 2016. And before that point, Bitcoin was simply too small to be massively correlated to the S&P. But right now, I mean, the argument is, it's a fact. It's not even an argument. Bitcoin is correlated tightly to the S&P 500 and traditional markets in general, of course. I'm just using the S&P 500 as the main example. Therefore, if S&P 500 goes down, Bitcoin will as well. Now, this isn't because Bitcoin is dragged down by the S&P or dragged up by the S&P. It's because the same mechanisms that move the S&P upwards move Bitcoin upwards, okay? If people are broke, they're not buying assets, S&P or crypto. That's the simple fact, right? And unfortunately, Bitcoin is a risk-on asset, and therefore it moves in the same way the S&P does. Hopefully one day that's not the case, but right now it is. So Bitcoin has not really met its goals yet in terms of decoupling from traditional markets and becoming its own individual asset class. It's its own asset class, but in terms of what moves Bitcoin, it's the same as what moves stocks, unfortunately. And yes, you do have exceptions to that. You have months on end where Bitcoin will do an opposite move, but exceptions don't make the rule. The rule is if S&P is in a bear market, most likely Bitcoin's going to be as well. So this is the reason why the uncertainty in traditional markets has led to uncertainty on Bitcoin. And then the question becomes, what causes the uncertainty in traditional markets? Well, it's the economy, right? It's the economy. And if we look at, we can look at the S&P TA all we want. S&P is in a very important triangle formation here. It's on support. It hasn't made a complete breakdown to the downside yet. It's still above its neckline of support. It has formed a lower high, which is not good news, but it's still massively in an uncertain position, just like Bitcoin. The reason why there are fears for the S&P right now, and hence fears for Bitcoin, because again, the same mechanisms that cause fears in the S&P cause fears for Bitcoin, is unemployment mainly, right? It's concerns about recession, and there's more to recession than unemployment, but unemployment is the main aspect, right? So why are people concerned about unemployment? Well, so the simple reality is this. If you look at the unemployment chart, which is in blue, okay, unemployment's in blue, and the S&P is in red here, right? If you look at unemployment, generally speaking, you see these rounding out formations before unemployment spikes to the upside. Rounding out, spikes to the upside. Rounding out, spikes to the upside. Rounding out, spikes to the upside, right? And this has happened 11 consecutive times, right? There's been these rounding out formations and spikes to the upside. Now, out of the 11 occasions that the unemployment rate has rounded out and then spiked to the upside, the S&P 500 has seen a bear market 8 times, right? So out of 11 times of rounding out the spike of the upside of unemployment, S&P traditional markets have dropped downwards into major bear markets lasting at least 6 months, 8 consecutive times, and not consecutive times, but 8 times out of 11. So you've got a very good correlation here between unemployment rising massively and traditional markets and all risk on assets, which will include Bitcoin in this case, dropping downwards into bear markets. Now, the fear and the concern right now is that there is a rounding out in unemployment. We haven't seen the spike to the upside yet, but generally speaking, when we round out, we do see a spike to the upside. So if we do see unemployment continue to come in higher and higher and higher, that raises the likelihood that the S&P 500 will roll over into a bear market. It doesn't make it certain because again, on 3 of the 11 occasions, we've managed to avoid a bear market. But it certainly is on the table. And we've got things like the Stram High Rule Recession Indicator indicating that we will see a recession. Now, I think personally, and I've thought this for a while, that this time is different, right? I'm not overly convinced by the recession scenario yet. I would need to see more data, and we do have more data coming in the next 48 hours. We have, again, the unemployment rate data coming in 48 hours from now, and the unemployment claims data coming in, in about 6 hours from now. So we do have more data coming out, and as time rolls by, we will see more and more certainty here. But right now, we still don't have the full certainty. But the reason why I'm not overly convinced in a recession scenario is because, one, that would break all cyclical trends. And that can happen, but obviously the trend is your friend until it ends. And so until it ends, I can't really sit here and be bearish, right? So that's one. But two, I believe there is cause to believe this time is different. If we look at the S&P 500 and we overlay it with the interest rates chart, so interest rates here is in red and the S&P 500 is in blue, what we see is that this is the first time since 2022 where the Federal Reserve has raised interest rates during an S&P 500 bear market. We've never seen that before. So we have a completely unique market environment here in relation to interest rates and traditional market valuations, right? Then we go and we see that historically speaking, when unemployment has been rounding out, so has the S&P 500 price action. It's not only at the spike that we see the S&P start to roll over, it's during the rounding out of unemployment, because people obviously are seeing that rounding out of unemployment is occurring, and they're looking back in history and they're seeing that, okay, when this happens, we generally see a spike in unemployment, and when that happens, we generally see a bear market. So they don't sell when unemployment spikes, they sell when the unemployment is rounding out. Now, right now, aside from the last few weeks, the good news is we are acting a little bit differently here. The S&P 500 is powering to the upside on a macro scale, even though unemployment has been rounding out basically since a year ago. So this is a good sign, right? There is a good sign, here that the S&P 500 and the Federal Reserve has reacted differently based on, the S&P 500 has been moving to the upside while rates are rising. That's the first time it's ever occurred, right? On top of that, the S&P 500 is on a macro scale continuing to the upside, even in wake of unemployment rising. So there's a few factors here that are showing us that, okay, this time might be different. Maybe we don't see the conventional bear market due to unemployment spiking here, even if unemployment does spike. On top of that, we have the fact that the macro trends, I'm talking about 18.6 real estate economic cycle, I'm talking about the presidential cycle, I'm talking about 4-year cycle on cryptocurrency, and many more, all suggest that the assets top out next year, not this year. So, this is what's leading to the uncertainty. On one hand, you have a very simplistic view, which is saying unemployment is rounding out, it's going to spike to the upside, and that will lead to a bear market across assets. And on the other hand, you have the view which is, okay, that's true historically, but this time is different due to these reasons, and we've got the macro trends to support that. So which view is stronger? Now, in my kind of view of this situation, I would say the latter is stronger. I would say the idea of cryptocurrency and the S&P 500 continuing to the upside into next year, that is the stronger argument. But I can't be certain of that, and the fact of the matter is no one can be certain of that until we see confirmation of what's actually occurring. We don't know, right? That's what's leading to the plague of uncertainty right now. So what we can do here, instead of sitting here speculating and basing our decisions based on speculation, we can wait for actual confirmation. And that confirmation is going to come through the S&P 500 and its reaction to unemployment. But it's also going to come through the Bitcoin charts themselves. Because again, we know that Bitcoin is connected to these narratives. And in order for Bitcoin to move upwards or downwards, we would need to see a resolution of these narratives. So the Bitcoin price chart, the channel formation, and also the RSI structure are going to give us good indications of where these narratives are heading, whether they're going to be a bullish resolution or a bearish resolution. So I hope I explained the situation right now well. Again, I'm leaning macro bullish until proven otherwise on both S&P and Bitcoin and even the macro economy. I am leaning macro bullish until proven otherwise, but there is a chance I could be proven wrong here, right? And that's why I'm not sitting here saying jump into Bitcoin, jump into altcoins, jump into stocks. I'm not sitting here saying that, right? I'm actually on the fence, on the sidelines for the most part right now. I'm waiting for the confirmation. Regardless of what I think, I need to see the confirmation, because we're not gamblers, guys. We are investors, we are traders. We wait for the evidence and then we make a move. That's what differentiates a trader and an investor from a gambler. So I hope you guys found that situation analysis useful. And hopefully you understand the situation a bit better right now, why we're going sideways for so long here and when we'll see a resolution. I hope I cleared that up, guys. Thank you for watching. If you found that useful, leave a like, comment, and subscribe. It helps me out a lot. Also, go ahead and like I said before, check out those exchanges. If you're interested in getting on a good exchange, 15% trading fees are available down below. Go ahead, by the way, if you're interested in my podcast, I've got a second channel. We post, you can read the titles right there of my 3 most recent podcasts. If you're interested in any of that kind of stuff, you want to see my views on things, or you want to, join the discussion there on YouTube comments, you can go ahead and do that. Pretty interesting stuff there. I'm pretty excited to keep going there. Then we have the VIP group, right? If you're interested in getting altcoin trading signals 4 times a week, we've been posting on VIP for 2 years now. We have a structured 78.39% win rate over the course of 2 years in a PDF document. All the trading results are fully transparent. So take a look at the results, see if you like them. If you like them, you think they're good, go ahead and join the group. You can't hurt there. You're going to get access to altcoin trading signals and get access to a good group chat with 115 other members. On top of this, the final thing I'll mention is the Become a Trader 10-unit course, which teaches people how to trade. It teaches people TA, teaches people FA, teaches people how to manage their emotions, market psychology through worksheets, videos, slideshows, right? All these kind of things, right? Targeting different type of learners psychologically, everything you need to learn how to trade at a semi-professional level at least, right? 95% of the things I use on a daily basis is in that course, so check it out if you're interested. All the information's on the website. Thank you guys for watching. Hope you enjoyed. I'll catch you tomorrow.